the lower Trump goes in the polls, the higher that's going to go. Some of these state polls that we're seeing for Senate races, Steve Bullock has a chance in Montana. Even the guy in Alaska, Sullivan, is starting to look like he might have trouble. And this could be really bad for the Republicans.
Warning. The Political Trade features probabilities and perspectives about politicians, political parties, political outcomes, and political wagering. The Political Trade is rated NSFP, not safe for partisans.
Welcome back to The Political Trade, the podcast for people with a passion for politics, probability, and profits. I'm Jeff Joseph, editorial director of Luckbox magazine, hosting the podcast where conservatives and liberals, Republicans and Democrats, partisans and wingnuts converge to make money betting on politics by trading in the prediction markets in the stock market for politics at PredictIt.org. Coming on the show today is a longtime friend of TPT. He joined us for our first episodes, and we're happy to have Scott Supak making his long-awaited return in just a minute. And as always, I'm joined by Mike Reddy. Mike is an editor at Luckbox magazine, a new prediction market trader, and the producer of The Political Trade. Mike, we're doing something different today, aren't we?
That's right, Jeff. Listeners have been emailing us, tweeting us, providing feedback, and most importantly, asking us questions. So today we're going to be going through the TPT Mailbag, so to speak, and we're going to be discussing some of the pressing topics and questions that are on a lot of listeners' minds.
Well, who better to do that with than our friend Scott Supak, right? In fact, let's bring Scott on. Scott is among the top 100 traders in PredictIt's All Predictors leaderboard for the past year, with a 530% plus return on investment on a year-to-date basis. And his numbers go way back. He's been around these markets for 5 or 6 years, not to mention he helped launch the Political Trade podcast. So it's great to have Scott back. Scott, how are you?
Great to be back.
Well, first things first, because it's most important. Everybody has to have a hobby, and yes, you are a full-time prediction market trader. But how is your beef jerky business coming along? We're waiting for your beef jerky.
We are almost ready to start. There was a lot of things we had to get done to convert over from a restaurant to a beef jerky making outfit, but we're almost there, and you guys will be among the first to get samples.
All right, and you'll probably be our first advertiser on the Political Trade. Aside from Luckbox magazine, I am looking forward to talking about your beef jerky. So that's fantastic. Well, Scott, listen, you and I have a lot in common. I'm not sure we're so politically aligned, but I know there's two things I'm passionate about that you share. And any man who loves Brockmeyer and Sazerac is always going to be a friend of mine. So I know
your
we
first
share
two
that
commercials, right?
Yeah. How about it? And actually, in many ways, Brockmeyer and Sazerac are one and the same. So I know we have that common intersection.
Brockmeyer has become my favorite show, I have to tell you. Thank you for turning me on to it. I'd been tempted to watch it for a long time. It's so good. It's really hard to express.
It is so good. And for listeners who don't know Brockmeyer, it's an IFC show that Hank Azaria actually originally wrote for Funny or Die and stars Amanda Peet. The segment on Funny or Die did so well, it became a show, and it's aired for 4 seasons. Just aired its final 4th season, and it's fantastic, particularly seasons 1 and 3. It's extraordinary. So, and it's really well suited for the mentality of political traders. So we highly recommend you check it out.
Right up there with Uncut Gems.
It is right up there with Uncut Gems. I have a feeling we'll be talking about Uncut Gems at some point later today, but let's jump into it. We want to go through the TPT mailbag, and we wanted to do it with you. So worth noting, if you're a listener out there and you have a question and you'd like to ask it for a future episode of the show, just go to thepoliticaltrade.com and send us a message from the bottom of the page. So, Mike, let's take a look. What do we have first? What was the first category of reader feedback?
Well, we got a lot of positive feedback from the episode that we just did last week with Rachel Bitecofer. In fact, in less than a week that it's been out, it became one of our most listened to episodes, the second, in fact.
Well, Rachel's very active on social media, and as you know, we noted in the last episode, she earned her chops on the 2018 midterms that she very accurately forecasted. What was fun in the
Nailed it.
last episode, yeah, she nailed it, right? In fact, Scott, you introduced us to Rachel. That's how she ended up on the show. So thank you for that.
Let me say about Rachel, she doesn't care about probability. She's just going to pick a point, and if you want to hedge on either side of that, that's up to you. And I kind of like that. It's refreshing.
It's a good point, but her main premise about the evaporating middle and the hyperpartisanship, I think it's about time somebody really recognized that. So I think that's what's so relevant about her as a forecaster is that she puts less emphasis on the middle and more about defining,
The argument's been going on for a while. She's not the first to get on this side of the argument, and a lot of people give her grief for it. But it's more and more true all the time, and Trump has only made it more true. So
That's true. That's true.
She's in a good place right now.
She is in a good place, and we actually took her to a new place. We took her out of familiar territory in our last episode, and we walked her into the trading pits of the political trade for the very first time. She had never placed a wager on PredictIt market. She hasn't till this day as well. We don't expect that she likely will. But what she hadn't really understood is why people were congratulating her in the past for making good predictions, that they had actually won money based on her predictions.
Yeah.
So we took her in the market. She gave us about 10 predictions. She rang our bell about 10 times as well in the last episode. So if you haven't listened to it, you might want to go back and check it out. What we did hear was from a lot of readers about it since.
Well, before you move on, I'll say I have a new ranking. She on Trump to win the popular vote. She wasn't just a no; she was a hell no.
Hell no! Yeah, we hadn't had a hell no.
So Rachel Bitecofer, different rankings of no's goes from hell no to maybe no.
Mike, I think we're going to need a bigger bell.
Yeah, exactly.
I think so. Well, some of the feedback of Black Russian, of course, God forbid you traders on PredictIt actually go by your names, but he mentioned it was especially cool to hear her on a podcast for the first time actually speculating on the prediction markets because they were used to her forecasts and just that. Alton Drew mentioned that he appreciated her analysis of Biden's VP considerations, specifically related to avoiding picking a candidate with a record of law enforcement leadership issues, which of course, touches upon Demings and Harris. We can talk about that later, but that was something she brought up, and we thought it'd be a good idea before we move on just to take a look at some of the trades she had just a week ago in the last episode. Among, like I said, she rang our bell 10 times, but one of them was which party will win the U.S. Senate special elections in Arizona. At that time, she called a yes at 80 cents on the Democrats. It's now trading at 84. Will Donald Trump win the popular vote in 2020? She called the no at 77. That's now trading up 5% to 82. Which party will win Pennsylvania in the 2020 election? She called a Democratic yes at 66, and now that's trading at 70. So a good example in one short week. Those are 3 trades of hers that all moved in her favor pretty quickly. Luke Renner suggested that Rachel should start a prediction market, a hedge fund, adding that he would give her $10,000 if she did. So
that sounds like a plan.
Sounds like a plan, right?
Yeah. There is one thing my grandpa always said: don't toot your own horn. But when it comes to Arizona, the group that I work with, we were all over that a long time ago. I got my D yes, R no at 66 cents.
At 66,
we jumped on it as soon as we started seeing the Mark Kelly fundraising numbers, which were just and still are just insane. In fact, reverse coattails are probably going to go from Kelly and Biden will probably win Arizona. Arizona is now blue on the PredictIt board, so.
It is blue on the PredictIt board. That's interesting that Arizona has moved to blue.
And that's a strong buy for me.
Yeah. Well, when you think about it, Clinton's voting margin, she lost that state by about 3.5 points. But Biden's 5.5 points ahead in the most recent RCP aggregated market. So So yeah, it's certainly looking to be a flip over.
Right.
Well, we also received a lot, and we know this is a hot issue among active prediction market traders, and it's about the tweet markets. In fact, it looks like the Political Trade podcast is much better predicting than we even thought. We do a podcast solely focused on the tweet markets, which of course is the frequency that Donald Trump, under real Donald Trump, under at White House, and under at POTUS, his 3 tweet platforms. It's the weekly frequency of those tweets. And right after we did a full deep dive into how to trade those markets have been suspended at Predict Its Own Choice with not too much notice, or just they disappeared. And of course, a lot of traders who rely on actively engaging that market were a little disappointed to see those disappear.
Yeah. In fact, I never played tweet markets, or rarely. I would play RDT sometimes when he was going off. You go in and grab that last bracket. But after listening to Derek Phillips, I actually started tipping my toes back in a little bit, and then poof, they were gone.
And then they were gone. And there's been a lot of conjecture about it, but I think it's just easy to remind ourselves that the prediction markets exist under no action letters that are granted by the CFTC. And, the letter's public knowledge. You can take a look at it. It was dated October 2014, and it specifically speaks to a no action authorization to allow for the trading of political events and economic indicator markets. So there must be time to time where the principals over at PredictIt, in discussion with CFTC, start reevaluating certain markets as to how well they fall under those parameters. So I think the only thing we can count on is that no market is always going to be there. They're probably going to come and they're probably going to go. And
other than the core ones, in the letter, they actually mention a few. They say including, and they give the big ones. They give the POTUS and the control of Congress. So I think those will always be there.
They do, and we would expect that. In fact, they make reference to the Iowa election markets and use those markets as an example. And remember, no action is not an opinion. It's issued fully at the discretion of the office. Right. Can be revoked at any time. So, I'm sure it was an important market to predict it. I'm sure we all like to see it return. Maybe it will, but in the meantime, we'll just wait and see. I think of all the people commenting on it, I've heard a lot of noise, but I've seen a lot of smart commentary from the likes of Doma and Josh Golden, who have been pretty articulate and thoughtful with their commentary about those markets, right? Yeah. The letter that caused us to get back on the phone and call Scott, even though we do that frequently anyways, is a letter we received from Johnny Ringo, who is a listener to the podcast and a new prediction market trader. Johnny told us that he liked the tweet market episode, and with Derek's insights that we just talked about, he was also able to make some money in those markets before they disappeared. But he was having trouble mastering negative risk. And if we would be willing to dedicate an episode to covering pros, cons, the tips and tactics surrounding negative risk. And negative risk was first introduced to us by you, Scott. It was the first strategy that I learned that was a aha moment and struck a bell. It was the reason my account doubled from its early starting days once I started to get the feel for negative risk. And we thought that was the right thing to do, is to bring back the guy who introduced us to negative risk all the way back in our first episode. So Johnny Ringo, the next segment is going to be devoted to you. Understanding negative risk opportunities is really essential for any aspiring prediction market trader. And it seems a little complicated, but it's not something to be intimidated by. Negative risk is an essential trading tactic for new and veteran traders alike. We're going to take a quick break, but just in a moment, Scott Supak is going to help serve up a master class on nailing negative risk. We'll be right back. We're back with the tactics segment of the political trade. Today's lesson is Negative Risk 101. And Scott, take us to school. We're going to start by talking about we're going to use to illustrate this market will be the 2020 Democratic vice presidential nomination. Currently, there are 31 contracts in this market. They just keep on adding names, more being added on a regular basis. Of the 31 contracts, 11 are trading above a penny. the 229 active markets on PredictIt. This is the market with the third most trading volume. 44 million shares have traded already. And we talk about it frequently. Kamala Harris in front at 46 cents, meaning 46% probability of her being named. Val Demings next at 17. Keisha Lance Bottoms, mayor of Atlanta, at 10. Elizabeth Warren, senator from Massachusetts, 8 cents. Stacey Abrams at 5. Tammy Duckworth at 5. Susan Rice at 5. Michelle Obama at 4. And the list goes on and on. So that's a background, and hopefully you're looking at this market on PredictIt. But let's start with the basics. Scott, what is negative risk?
Free money. It's where your risk in the top left of your market goes into parentheses, which means they've literally given you money because the market was so out of whack and you helped fix it.
And I can't stress that enough. It's the same way you answered this question in an early episode with us. And it's why Mike and I really latched onto this strategy right away. And the first time you actually exercise negative risk and you see money being credited back into your account and increasing the upside on your trade without increasing the risk, you immediately get the idea. But we're going to walk through that a little bit more, but free money is a good short answer. So how do you achieve negative risk, Scott?
Well, you find a market that's overbought. So the bottom line is that the way I do it, because I think from the yes side, is that you add up the prices, and if they're over $100.08, there's free money there on the table. If it's $1.10 or so, and you buy at the existing prices, you will and buy one share of each contract. When you get to the end, you'll see that you have actually been given money. You'll see your market investment go into parentheses, which is literally negative risk.
But generally speaking, you can in a polling market, in a margin of victory market, in a market like this where there's multiple brackets, you can buy multiple no's, knowing that you can only lose one. And because you can only lose one, PredictIt makes a calculation that says, well, we're not going to charge you for the second bet because you can't lose them both. So let's talk a little bit more about that calculation.
That's linked margin, we call that. I call it linked margin. It's essentially in a linked market, when you buy a second contract no, you have reduced your risk in the market as a whole. And when you reduce your risk, they give you money back so that you can go reduce your risk further. And if you just keep doing that and you get the lowest prices you can for all your no shares, you will literally be given free money.
And you've reduced your risk because you've increased your opportunity with that subsequent purchase of having a favorable outcome by
Exactly.
and that's where the credit comes from. So you can buy multiple no's. Looking at the VP market right now, for example, I believe Kamala Harris is a no, and that, even though the market thinks that she's the favored candidate by every standard, so trading up at 47 cents. But there are some pretty obvious no's. So illustrated with the market. So do you have no's currently in this market?
Oh, I have currently I have $440 in free money. And a lot of that, I actually have a lot more than, it just went to 541 because I just bought some no's in Demings. No cops is my theory here, but same as Rachel. But the strategy behind these big markets where a lot of people get negative risk is that there's going to be a bunch of names that are just impossible right from the get-go. So you need to get those no's as fast as you can. So for example, there was no way Cuomo, I knew even back when it was possible that Bernie Sanders was going to be the nominee, that Cuomo was not going to be the vice presidential nominee. So I got 867 no's of him for 98 cents. Then every time I buy no's in somebody else, I get money back. So I just blew, I blew all that money on Cuomo. But every time now I buy a contract, any contract no, I get money back. And every time they add names that I buy no's in, I get free money. So we love these markets where not only there's a lot of people that don't have a chance that you can get no's on early, but they also keep adding names. And every time they add a name, even if you pay 99 cents for those no's, that's going to be $8.58 more in your pocket.
So how many no's do you have currently in this market?
I have max no's on everybody except Lujan Grisham and Tammy Duckworth. I have yeses on them. Those are my long shots. What I do is I take some of my negative risk free money and I buy yeses on a few long shots that I think have a decent chance that are underpriced. I could sell my 4,000 Tammy Duckworth yes now for 6 cents and make a profit, and then buy nose and get a whole bunch of money back.
And I know that because in an early episode, you first brought Tammy Duckworth to our attention. We titled that episode "Tammy 2 cents," so we know what price you bought Tammy at, and she's trading at 6 cents now. So you've had a nice 3x return on that. So that's the basics of how it works. But Johnny Ringo had some very specific questions. So let me.
I feel you, Johnny. I feel you. I know I was where you are once upon a time.
All right. Well, let's move him forward then. He says, do most people that employ negative risk, do they hold all the way through, or do they attempt to short sell at some point?
It's hard to say what most people do. It all depends on the circumstances, your bankroll. It depends on the market. Sometimes I hold and sometimes I'll sell. For example, in the denom market, the Democratic nomination market, I had nose on everybody and lots of neg risk, hundreds of dollars in neg risk. And when the moderates all dropped out and it became obvious that Biden was going to win, I sold my Biden nose for a loss and bought yeses. And those yeses have, of course, gone up and more than paid for the loss that I had on the nose. And all of this is being done with only 100 yes shares left in Joe Biden. My payout will be over $1,000, which means that most of the work for that payout is coming from all the no shares on everybody else. So yeah, sometimes I bail. If it's an obvious thing like that, where it's obviously Biden's going to win and you're sitting there holding no's that are going to cost you money, get rid of them. There's no reason to hold them. If you have the bankroll and you can sell those no's and take that hit, then you're much better off. And if you have the bankroll, then buy yeses in that situation to help cover the loss that you just made by selling those no's.
Well, that segues into the next question. And I think this is probably what prompted Johnny to reach out to us. Why does it tell you that you can't sell in certain situations because you don't have enough money in your balance?
The way I like to think of it is they gave you money to buy those no's. So if you want to sell them, you're going to have to give them money. We call this negative risk free money, but as soon as you try to back out of it, you realize that it's not very free because they gave you money to work with and now they want that money back when you increase your risk. So if you sell no's, you're increasing your risk in the market as a whole, and that's going to cost you.
So in other words, you just have to have a larger balance. So you can never max out an account with negative risk, because if you intend to leg out of any of those positions, then you'll have to put up additional cash.
Yeah, if your bankroll's not big enough to handle the sales, then I say just hang on. There are people I know who will just buy more no's in the other contracts to make up for it. That way they get money instead of costing them money. But if you've already maxed, that becomes a problem. The bottom line on this, though, is that if you reduce your risk in the market, they'll give you money. If you increase your risk in the market, they'll take money away from you. So that applies no matter which side you're on, whether it's yes or no.
That's it. Right. Next question from Johnny. In fact, we're going to be sharing all this in the notes section, the show notes on this particular podcast, including a spreadsheet that Scott has provided for more clarification. So if you are wonky and really want to understand negative risk, and who doesn't want to understand free money, you're going to want to check out those show notes. So next question. I've read that some people claim that if all the numbers are above 105 or 115, you can achieve negative risk with no risk. Can you explain how that would work?
Well, there's two ways of looking at negative risk. One is that you work for it. You look at what the market is and you put in bids and you wait to get your no shares as cheaply as possible. The other is you look at the market and you see that it's adding up to over $1.08, which is free money after fees. And that means you don't have to wait at all. You could just go in there and pay the price that's on the board at the moment. You will see markets at $1.25. I've seen markets at $1.70. You will see some of the craziest things, especially in low volume situations where there's a lot of volatility and a lot of confusion and people really aren't sure what's going to happen. And markets with a lot of bias, like VP. I haven't added up VP today, but there's a lot of bias behind this. A lot of people are biased towards their particular favorite pick. So they tend to run up those prices. And VP is almost always overbought. The market is always priced too high. So you can almost stroll in there any given day and buy at current prices, buy all the no's at current prices and get free money. That's an arbitrage. I call that the no arbitrage because it's literally on the table waiting for you to take it. You don't have to work for it.
So bear with us if those numbers seem confusing, but let me simplify. Consider a market that had three brackets or three options underlying. One's trading at 30 cents as a no. One's trading at the second at 30 cents on the no. And the third one is trading at 50 cents on a no. That adds up to 110. Over 108, which is the number that Scott just identified. That means you've already implied if you bought all the no's that you would actually come out ahead because the market only can pay 100. So that's the original criteria that you're looking for. Has the market overpriced the no's that allows for that opportunity to exist? So that's what you're referring to when you mention 108 as a threshold.
And if it has, then you have an arbitrage. It's literally the money is sitting there waiting for you to take it off the table. If it doesn't add up to $8, it doesn't mean that over a time span, it won't. In other words, you'll have B3 in the lead today, B4 in the lead tomorrow, B5 in the lead the next day. And if you're patient and you put in bids, I call it the liquidity providers union. What no side neg risk guys are doing is putting a whole bunch of packages out there for people to buy at various prices. And they're hoping that the market moves around and buys those packets. And those packets are all at extremely low prices for the no side. And the cheaper you get those shares, the more money you make.
All right. So Johnny also writes that I understand that there are opportunities to employ negative risk, even if a market only has two brackets. How would that work, Scott?
Well, it's just like any other linked market. The idea is if people are overpaying for those yeses, then you can underpay for those nos. So if you have two brackets and people are paying 60 cents for yeses on each of those brackets, that means you're paying 40 cents for the nos. And if you max those, my calculator here says you'll get $297.50 at negative risk. The idea is the same. No matter what you're doing at PredictIt, you always want to pay the least amount for the shares you want. The less you pay, the better you profit.
Scott, this isn't necessarily something that you have to do all at once, is it? Or could you buy, say, a 40-cent no today, and then if the market moves the other way around, then you can grab the other no for 40 cents?
Exactly. In fact, that's the way I usually do it. Rarely will you see the arbitrage, especially in polling markets where the money is very smart. You'll rarely see the market add up to over $8. There will almost never be an arbitrage on the table. But if you're patient and you know what polls are coming and how the market's going to change over the course of the week or the month, then you can place bids and wait, and you'll see your negative risk fill in as the market moves up and down between the brackets.
Johnny was trying to get a feel for how pervasive negative risk is, and his closing question to us was, how frequently is it employed among traders? And as I said, when you shared it with Mike and I, we immediately began using that strategy, and now it's part of our ongoing trading tactic. I used it in margin of victory markets while the primaries were busy because once the trend becomes clear on a margin of victory, that you can just start buying no's even if they're in the mid 90s, or high 90s to scoop them up.
I pay 99 all the time. Yep.
Exactly. So and the universe of prediction market traders better than we do. So tell us what percent do you think of the more experienced traders use negative risk?
I think that on the big markets like POTUS and VP and, those kind of things, I think most of us do. It's not that we set out to get negative risk. It's just that we eliminate a lot of people from the calculation and we go bet no's on them. And even if you've only bet no on half the people in VP, you've accrued what I call potential negative risk. You bought your no's. Like I used Cuomo as an example. I got those no's at 98 cents and now they're 99. I could sell all of those and make $8.58. But why? If I hold on, I get that extra penny and I can buy no's in somebody else and get money back right now. So I think a lot of traders just buy a lot of no's on a lot of contracts and then leave yes shares open for people that they think actually have a chance. I do it a little more differently. I kind of set out looking for the neg risk because I want to play with house money. And I want to play with a lot of house money. So in the VP, like I said before, I limit myself to 2, sometimes even 3 long shots, but it's all paid for with house money. I'm sitting at $581 in negative risk in the VP market. And yet if he picks Tammy Duckworth, I make $5,000 and I didn't risk anything. There was a time when I risked something. When I first started buying no shares, there was risk on the table, but that went away really quickly as soon as they started adding names. So I think a lot of us do it. I think we do it, but it's not like we're setting out to get negative risk. We're just building kind of the basics of negative risk. I know Derek mentioned his penny flipping, which is really a good strategy, and I've been thinking about it a little bit more. In a market like VP, you don't want to penny flip people that aren't active, so you want no's on all of them. But I might have too many no's here. It might have been better for me to, for instance, with Harris, because I got caught with 65 cents no's, and now her no's are 53 cents. It might have been better for me to just not get any Harris no's. It would have cost me some money. I wouldn't have as much negative risk as I do now, but I could have taken pennies on yeses and bought them at 40 cents and sold them for 41. And Derek says he makes about $100 an hour doing penny flips like that. That's a great strategy. It really is. And my strategy requires less work. I don't have to pay attention to it. I can set it and leave it to a large degree. But if you're an active trader and you want to make a lot of money instead of just a little like I do, I would recommend Derek's method on that.
And of course, you're referring to Derek Phillips, who has been a guest a couple of times. You can look for him in our listing of episodes. He is the man who started with 400, who turned it into $400,000, and is still the number one most listened to episode of the political trade. So
he's the best trader I know. Yeah, that's a good point that he makes anyway. But one of the reasons that I love neg risk is because I did it for a long time when I first started playing polling markets. I was scared of polling markets. They move fast. There's a lot of moving parts. Back then it was just the Obama approval RCP market, but and that's not even, RCP is easy because they use a limited number of polls and then they just drop them. They don't fade them out. So you could figure that part of it out pretty quickly, but you need to know poll schedules. You need to know when the polls are coming, all those things. It's a very complex market and it's very easy to lose money. But if you're doing negative risk, you've reduced your risk so much that you can play along and learn the rules without taking too many bruises. You're going to get a bloody nose, but you might not bleed that much, is the idea behind it. So I did it for about a year. I did neg risk strictly. I never bought a yes share in Obama approval market for almost a whole year until I felt comfortable doing what Derek calls the iron condor, short the ends. So now that's kind of what I do. I short the ends and then buy a tranche of yeses in the middle.
So, Scott, no doubt there are some listeners who have been following along, and they might feel as though they're starting to get a grasp of how to approach negative risk. But if you're just a fresh fish new trader, you have a real small bankroll, what's the best way to maximize your potential using negative risk? Do you need an even number of, let's say you're in a two bracket market or two contract market. Do you need an even number of no shares in both in order to maximize your potential in negative risk? Or how would they approach starting this tactic?
I would start the tactic by looking around the site for the arbitrage. There's yes arbitrages too. Sometimes a market will be oversold. It'll be underbought. And I've seen markets add up to 80 cents. You could buy all the yeses for 80 cents. Boom, that's a free 20 cents right there. But a yes arb, you don't get any linked margin back. It's all going to come out of your pocket. So if you have a small bankroll, I would say go around the site, look for the big markets that you can get negative risk on easy. Look for the arbitrage. Look for the things that are adding up to over $1.08. And, then slowly start moving into things where you say, okay, I can watch the news cycle and find out who's going to go up in the, if there's going to be a big article about Val Demings tomorrow, then she's probably going to go up a few points. And then you can start playing with, not buying so many no's of her yet and waiting for the news cycle to catch up. And then you can get cheaper no's on her. Same with polling markets, until you understand the schedule of what's good. I'd say my line in polling markets is know what's coming and hedge like hell because you're wrong. Negative risk allows you to take lumps without getting hurt too bad over it. So I would say if for somebody that's brand new, go tiptoe into some of those markets. Here's one of my favorites is the balance of power market. Will it be a D House D Senate or an R House D Senate, or it's only 4 brackets, but if you're patient in there, you can get great prices on the nose. For instance, the Republicans are not going to take back the House. There are 2 contracts there that involve Republicans taking back the House. Neither one of those is going to happen. You don't have to pay what the no cost now, you can put in bids and get in line and wait for the 98-cent R House, R Senate. And then once you get those, you can get that next bracket, the R House, D Senate, which is also impossible, right? And those are a little cheaper. I mean, it's those kind of markets. If you're just patient, you'll see those. You'll get those sales. You'll get those cheap no's, and then you'll see how easy it will become clear to you how easy it is to get the negative risk out of it.
Scott, I think that's an excellent illustration of an entry-level negative risk application. Let me actually suggest another one along the same lines. In the VP market, the one that we're talking about right now, I don't think there's any probability that you could imagine that Michelle Obama ends up on the VP ticket.
Absolutely.
Or Gretchen Whitmer, for that matter, or
Absolutely.
Amy Klobuchar. So there
you
are
missed your
three
chances
names.
on them.
Yes, those are three names that are screaming no. Each one of them are trading at 97 cents. And remember, listeners, that the free money kicks back in on the second no you purchase. That's when your account will get credited and you're on your way towards negative risk. So with Michelle Obama, Gretchen Whitmer, and Amy Klobuchar, all 97-cent no's, which have 3 cents that you can still make on those contracts, that's a simple entry-level way to get in and try negative risk for the first time.
Right. Once you've got those 3 no's, they're going to fall to 99 cents eventually, which means that all the other contracts are going to go up by an average of 3 cents. Some of them will go up more and some of them will go up less. But the point being that as these prices for the ones you already bought no's for drop, the other prices are going to go up. And that's when you want to buy your no's on the other ones, because they will be even cheaper than they were when you bought the no's on those 3, if that makes sense.
It does, but you are the right man to walk through this market with us. So thank you, Scott, for this. The one thing we know for certain is that you'll be back for Negative Risk 102, but our entry-level portion on negative risk was essential. We're going to be right back after a quick break, but then we're going to ask Scott for his perspective on some specific predicted markets today. We're going to get Scott to ring our bell, but first...
Want a little more luck in your life? Get Luckbox, the control freak's guide to life, money, and probability. Named the best new magazine of 2019. Luckbox is a must-read for side hustlers, gamblers, entrepreneurs, and active investors. Each issue features best bets from prediction market experts, as well as timely sports wagering, stocks, options, futures, and cryptocurrency trading ideas. You can buy Luckbox on newsstands, but with this special offer, listeners of the Political Trade can receive a 10-issue digital subscription absolutely free. Just visit getluckbox.com to receive the award-winning magazine right in your inbox. Don't rely on luck. Get Luckbox for free today. Learn more at getluckbox.com.
Welcome back to The Political Trade, featuring super trader Scott Supak. Scott, we are back. Thanks for walking through negative risk with us. But as always, we want to walk through the trades from our super trader guests, where you're actually placing bets today, what looks good to you. So we're going to start with the first market you mentioned to us that you wanted to talk about, which is, what will the balance of power in Congress be after the 2020 election? So that's, what will the balance of power in Congress be? There are 4 underlying brackets. That's either you have the House and the Senate, so the Dem winning both the House and the Senate. That's at 57% probability right now, or 57 cents. Democratic House, Republican Senate is at 35. Republican House and Senate, 15. Republican House, Democratic Senate, only at 2 cents. What's your trade here?
This is a good example of a market that I use negative risk, but I'm not getting it. To really look at it in a simple way, I got my R House D Senate for 98 cents. I maxed. So I have 866 shares of no in R House D Senate. I got my R House R Senate no's, 866 of them, at 76 cents. Those no's are worth 85 now. I got my D House R Senate no's, only 500 of them, at 61 cents. Those are worth 65 cents now. And I bought D House D Senate yeses at 51 cents, and those are worth 58 cents now. So if you look at it, I don't know, I'm not a mathematician, but I play one on podcasts. And if you sold those yeses now, if I sold those D House D Senate yeses and turned around and bought no's, I would go into negative risk. I have $500 in market investment now. That $500 would disappear, and I would actually get, probably, just from my feel for it here, would probably be close to $600. So I'd have about $100 in negative risk in this market right now. So I call that potential negative risk. It's there if I want to take it, but I don't, because I really think the Democrats are going to take the Senate, and it's a lock. I mean, it's not a lock that the Democrats are going to win the Senate. What's a lock here is that I can't lose money, because I could bail, and second, because I got my D House R Senate at 61 cents. If that's the real trick there, is I got those no's so cheap. There were people, and also the R House R Senate, there were people way back when this market first came out, who were so confident about Trump that they thought the Republicans would take the House back, and they were willing to pay way too much money for it. And those are the people I sold yeses to. There's the real trick for me in this market.
So this market's an interesting combination of both your long play, which is, of course, D House, D Senate at 57 cents, and your application of buying no's in the direction of achieving negative risk.
Now, even though you're late to this market, if you want to go in there and try negative risk now, you can. The line to get a 98 cent no for R House D Senate is not that long. There's only 19,603 shares ahead of you at the moment. You can put in your 866 share bid at 98 cents there, and it'll probably sell. This thing goes up between 1 and 2. That bracket goes up to 2 cents quite often. And obviously, if it's thinning out, there's a lot of demand at 1 cent for that, which is probably people selling. But you could be patient and get those no's at 98 cents. And then you could be patient and you could get your R House R Senate at 84 cents for a no. And you could get a few D House R Senates for 64 cents for the no. At which point you are on the precipice of negative risk. If you want to buy some cheap no's in D House, D Senate, you'll start seeing you get really close to zero really quick. You'll be into negative risk before you know it. So this would be a good market to go try it right now. But you got to be patient, because that D House, D Senate is only going to go up. The lower Trump goes in the polls, the higher that's going to go. Some of these state polls that we're seeing for Senate races, Steve Bullock has a chance in Montana. Even the guy in Alaska, Sullivan, is starting to look like he might have trouble. And this could be really bad for the Republicans. Not only will they lose the Senate, but they're going to lose it badly. So that contract is going to go up. It's going to go up into the 60s or the 70s at some point, at least. If it ever goes back down again, I'd be surprised. So I would get some yeses in that contract, write them up, and if you want, then sell those yeses and turn around and buy no's, and boom, you'll be in negative risk.
And it's also very important. You mentioned in passing standing in line to wait to get your trade filled. For listeners, if you don't know this, all you have to do is click on a contract, and where you see prices, then you click on prices, and it will show you what the underlying order book looks like, how many shares are out there to be purchased, what the bid offer book looks like. It's called the order book. And you can look at the price that you're trying to buy at and see how many people are in line before you. So that's what Scott's referring to. All that information.
And if you're in line, you can literally click on, if you're in line to buy no's, you can click sell no, activate the sell no side, and then click on the line you're in, and it will show you your offer sequence, the place you are in line. So, you can go check and see how long your wait is.
Yep. Very transparent order book at PredictIt. So let's move on to the next market. What will be Trump's lowest 538 rating? Of course, that's referring to 538, the prediction site. End of the day job approval by June 30th. Tell us a little bit about the background of this market, first of all.
Well, 538 approval markets didn't come out right at the beginning of the Trump presidency. It took a little while for us to convince them to do it. And for a long time, it was just a where is it going to end at the end of the week type of market. So it could go up and it could go down. These markets are what we call sudden death. There's going to be brackets that die. So for Trump's lowest 538 job approval, what they do is every night at midnight or 11:59, they go look at the number. And if the number is below a bracket, that bracket dies. So in this market, we saw B8 die the first day. We saw bracket 7 die the second day, I think it was. B6 died after 5 days. B5 still has people trying to buy it it's actually up to 2 cents now. It's dead. I don't know what that's about. We cannot go back up. This market only goes one way. So there's literally free money there. I'm looking to see how many. There's 4,618 shares. So you could max no on that many times over. And it's literally free pennies. B4 is probably, you can see it's 95 cents now. It's probably going to die today. The number at the moment is 41.019. He needs to get down to 40.94 to go down into B3. So B4 is hanging by a thread, as you can tell by its price. Now, so really, there's really only 3 brackets left possible in this market. He's hit his mean. The mean for the 538 average over the entire presidency is 41.19, I think it is. So he hit the mean and he's gone below it. The trick with this is that it gets harder to go lower. I still think he's going to get to B1. I don't want to call it a lock. It's definitely not a lockbox. But I have a nice hedge in B2. It's a losing hedge, but I don't lose much. And a little hedge in B3. It's a big loss if he stays in B3. The thing is, later in the month, there are some polls that are traditionally bad for him. ARG, which is kind of a joke pollster, they're always really low. They're probably going to be extremely low this time. There's a whole series of polls that he has to get through that are going to be hard. Rasmussen is a large part of this average, even though they're kind of a lame pollster. They have a big adjust, and since people have been home answering their phones, Raz only calls landlines, and since the pandemic, people have been home answering their phones, and you've seen his Rasmussen levels drop. Just in the last few days, Raz really dropped hard. Today it went down another point to 43, I think it is. If Rasmussen, because it's a tracker in this average, if Rasmussen stays down, it's going to be really hard for him to stay above 40.
So specifically, to sum that up, in this multi-bracketed market, of which originally there were 8 brackets, there's really only 3 or 4 that are live right now. Your suggested trade, currently at 49 cents, is the first bracket 39.9% or lower. Nice 100% return.
Yep. And hedge. Polling markets, I always recommend hedging in polling markets, except for when it's obvious.
Well, there's a flip side to that market. 538 has the highest end of the day approval by June 30th, as well as the lowest end of the day approval market. So now let's move over to what will Trump's highest 538 end of day job approval be by June 30th. So how do you play the inverse market?
And I am still a strong buy on B1. I'm calling friends I haven't heard from in years and telling them to buy yes on B1 in this market. It's a lockbox.
It's a lockbox. So
we've got the things that would have to happen for him to get back to 43.4% are insane. Sure, Fox News is going to be due before the end of the month. He's been yelling at Fox lately because they've been hurting him. Fox is a good poll. That's an A+ poll. It's not going to be 55 or whatever it needs to be to get them back up to this level. It's just every day, my guys, every day we wake up and we go look at Trump's highest market and we go, yep, still under 90. It's just amazing.
Well, what's amazing for a lot of people who are new to the prediction markets is that these kind of lockbox trades exist, and there's this free money. So even Rachel Bitecofer in our last episode, she was amazed by some of these opportunities. So one more time to reiterate, and we call a lockbox, in fact, we have another segment coming up with another lockbox trade, but it's more or less a sure thing. This is trading in the high 80s right now, which means there's still a 12-13% return over the next few days. Annualized, that's an enormous annual return, right, by any standard. So these trades are out there, and that's what you should be looking for. But your final trade is B1 in the Trump's highest 538 end of day job approval. That's your trade of the day.
Max it, as we say, max it.
Call your friends and neighbors, right? So Scott, these are great trading ideas. And of course, and speaking of trading, for those of you who are not already trading on PredictIt, we do have $20 for you. You can take advantage of the trades shared by Scott by going to predictit.org/promo/TPT20. Sign up, deposit $20. We'll match the first 20 you deposited. That's predictit.org/promo/TPT20. Deposit $20. You'll have 40 to trade with. It's that simple to sign up and trade along. We're going to take a quick break. When we come back, we'll be asking Mike today for this week's Luckbox. So we'll be right back. Most gamblers and traders know a Luckbox is an undeserving recipient of a favorable outlier outcome. Luckbox is also the name of our award-winning magazine as well that you can get for free at getluckbox.com. But fans of political rhetoric will remember the term lockbox.
I would put it in what I call a lockbox.
That's not Al Gore. That's a little help from SNL cast member Darrell Hammond in his 2000 presidential run. But that's what a lockbox is, kind of a sure thing, something that's safe. So Scott just shared a lockbox trade with us in the last trade segment in the 538 market. But Mike actually had a lockbox trade that he wanted to put in front of us today. So, Mike, what do you have?
Yes, so this is a lockbox recommendation, and it will be the Will Mike Pence be the 2020 Republican nominee for vice president market? So the last time I checked the pricing on this market, a yes was trading at about 85 cents. That was down 1 cent on the day. And a no is trading at 15 cents. And I'll tell you my reasoning for why I think this is a lockbox. So the shop at donaldjtrump.com is already selling Trump Pence 2020 flags, t-shirts, mugs, lawn signs, bumper stickers, campaign buttons, playing cards, and even a wooden train set. So although that doesn't necessarily mean anything, it's kind of a strange thing to do if you had this secret plan to ditch Pence like right before the election. Also worth noting, these rumors that Trump's going to ditch Pence are not really anything new. There was a Newsweek article I found from last December that covered Pence dispelling the rumors that he would be replaced as his running mate. And so this dates back quite a bit. On top of that, Pence's RCP average favorability is 42%. So that's not terrible for Pence, all things considered. And, a lot of people like to look at the vice presidential nominee as a do no harm candidate. But as Rachel Bitecofer mentioned last week, he had a very important role as Trump's VP in appealing to Christian voters to help quell their concerns about voting for Trump. So I think replacing him at this stage in the game would be a pretty drastic move. And I'm curious to hear your guys' thought on that.
How did I miss this market? I'm looking at the 90-day history, and this thing was 75 cents back in March. Where was I? This market is insane. Max it.
Max
Ding.
it.
Ding.
Hey, where's my bell, Jeff?
Yeah, where's the bell?
There we go.
And of course, there's the bell. And of course, with a lockbox, you're going to have to trade responsibly. Let me give you a little backstory on this market, though. It reminds me of when Anthony Scaramucci was on our podcast. It was a fun podcast to listen to if you want to go back to it. But he made it clear when we were talking about the clemency markets that Trump is going to do what's in his best interest. I think the only caveat here, which is a fair one, that Democratic strategist Paul Begala raised back in July of last year, when he kind of brought this issue up for the first time. He announced, and I remember watching this live on air, he announced that it was not inconceivable that the week before Biden would be accepting the nomination sometime in this coming July, that Trump would stand up and announced that he was going to put Nikki Haley on the ticket instead of Mike Pence in an effort to get suburban moms. The one thing we do know about Trump, he's hard to handicap in terms of what he says, and he's not predictable and not orthodox in any kind of strategy. I guess that's the only risk, is if he continues to see these polling numbers continue to fall, that he might scramble, God forbid, about recalibrating his own marketing or messaging, that he might try to rearrange the ticket. But as Mike said, those trains are already manufactured, right? Those T-shirts are printed, and it is really late in the game here, I think, to consider a ticket change.
The argument that you just made is a really good one for why it was 75 cents in March. So, if you were going to do it, you had to do it back then. This is a great catch, Mike. Good eye. Thanks.
No, absolutely. Get in on it.
You're absolutely right. This is only going to go. This is what I think Derek referred to these as time-sensitive markets, where it's just over time, it's just going to start fading away. So yeah, I would say this is a strong buy.
All right. Well, that is our Luckbox lockbox, and don't forget the one that Scott put in front of us as well. And Scott, listen, it's always great to have you. You are definitely a friend of the show. Well, thank you. It was good to have you back, especially to shed some light on negative risk and how to use it. And of course, you can follow Scott, and you should follow Scott on Twitter at @Supak. So that's SSUPAK at Scott Supak. And
I'll take questions on Twitter. If anybody wants to ask me questions on Twitter, I have, for you math-oriented people, there are some formulas that you can use to calculate when the negative risk is available. The show notes, the guys tell me they're going to put this little simple spreadsheet up. That'll help you. There's lots of ways of looking at it. But the bottom line with buying no side shares is just think backwards. You're literally just doing the opposite of what you would be doing on the yes side. So when you sell a no, you're buying a yes. When you buy a no, you're selling a yes. And if you start thinking of it that way, it gets a little bit easier. And then before you know it, you're talking backwards, as Steve Goodman said.
And when you buy your second no, there's free money that starts to kick in. So and you're on your way.
They literally give you margin to play with. How nice of them.
Right. So thanks for tuning in, Scott. Thank you again.
Thank you.
Thanks for tuning into The Political Trade, and be sure to subscribe to the show wherever you listen to podcasts to be the first one to catch the trends, tactics, and trades that are shared by our super trader guests. You can go to thepoliticaltrade.com to sign up to receive our newsletter, find us on social media, or send us a message. It's all there on the website, thepoliticaltrade.com. You'll want to hit the website also to subscribe, because in an upcoming episode, very soon, we'll be featuring an appearance by Scott Adams, the creator of Dilbert comic, who has since become a provocative political and social commentator. And he was among the very few that predicted the Trump win in 2016. So it should be interesting. Thanks again. This is Jeff Joseph.
And I'm Mike Reddy.
And remember to believe in math, master your trade, and join us next week on The Political Trade.
How did I miss this market? This market is insane. Max it.